This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, as always, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. Let's start here, with the S&P 500. S&P 500 currently trading down at 3,829, which is rather significant. I actually said yesterday that if we got a daily close just below 3,830, it would be very bearish going into today's trading session. And luckily, we got just out. I think the markets closed at around 3,827 during yesterday's trading session, which kind of formed this very nice looking shooting star formation here, which is typically bearish. So today I am expecting some downside volatility, and this of course was helped by Facebook completely missing earnings, especially on earnings per share. And that stock's down 20% right now, guys, pre-market. So a massive amount of market cap wiped out in Facebook yesterday. I think the most important chart that you should all be paying attention to is this one, the 10-year yields. This is the government bonds over in the US. And, you know, the last couple of days, we've seen a massive breakdown in yield prices. And hence, that's why we've seen the stock market rally rather significantly over the past week. But although we have had a massive breakdown, we've kind of still found support here. We're still clearly trading in an uptrend here. And it looks to me as if we are looking like we are going to bounce here off this uptrend line. And I feel like the yields are due one final push to go and test the highs. And I think that's going to cause some short-term downside volatility in the stock market. Same here for the US dollar. We did successfully break below the 50-day EMA, but we're still trading within this uptrend. And I think that personally, the dollar is going to be a lot harder to break down versus the 10-year yield. I do believe eventually we will break this uptrend. Of course, we have to break it eventually, but you know, in the short term, I do believe that we will eventually break it, but I feel like this is going to occur more towards the back end of November going into the final month of the year, and hence that's why I really do believe we are going to have a strong rally to see out the end of 2022. But for the time being, I do fully anticipate the yields to bounce here. I don't think that this uptrend is going to be broken within the next week or two, and in response to that, we are going to see some negative price movement here in the S&P 500. Don't forget, guys, we have formed this ABC correction. It looks to me that this C leg may have topped out during the top of yesterday's trading session.